Okay, let's start with the Nifty 50 analysis for September 11. So our first step would be marking important levels. So the important levels of previous swing high and previous low swing low can be marked in 1 day time frame. Here you can see the previous those things have been already been marked. So I'm just giving you an overview how and where it is marked. So for the previous day the swing was here. So for current day the previous day high and previous swing low are both are same. So for today the previous swing high can be all time high, so which I have been marked it in the red color so that it can give easy understanding of all-time high as well as previous swing high. So the previous swing which is not yet taken out without entering of bears, so this is where it lies actually. And one step two, which is marking of previous day high and previous day low. So these analysis have been already shared in the Instagram page and along with the Telegram page as well. You can check out the same and you will be getting all the previous day charts for the at least last 1.5 to 2 months. Okay, so the analysis goes like this. Previous day high is here and previous day low is here, and yeah, so all time high and previous swing high is already been marked, both are same, so only one line. Like I have been telling that most of my strategies that I use are decided whether to enter a trade or not based upon the first candle itself. So I have a strategy where the previous day high is taken out with a good candle. So along with pivot points and CPRs, we can decide whether to go for a trade or not. So yeah, that's how the strategy goes. So previous day high, which was the resistance for yesterday, along with the closing time, indicates that the stop loss for these positional traders would be here. So breakout of the same gives a very good momentum in the first candle itself. So the breakout candle you can see is nothing but a bullish pin bar candle with it, which indicates that stop loss of previous day high or the sellers is taken out, so that you can expect a good momentum for today. So as per the analysis, if with respect to the resistances or previous swings, previous resistances or the pivots, we will be deciding our targets, and when to enter the same or when to avoid the same will be decided based upon how far it is from our stop loss. So the stop loss would be below this pivot pivot support, or it can be below this one. So yeah, the nearest resistance will be this one, so we don't have to keep a very huge stop loss. Yeah, and yeah, like if we consider next pivot as our resistance, because we don't have any other resistances which are acting for the current day, so it is easily giving more than 2 hour ratio. So yeah, so this can be a good trade if we can hold, and if you have the appetite to hold for a longer day, longer period of time, you can book until the next pivot. Or yeah, if you don't want to get your psychology or execution to disturb, you can always go for 1:2 hour, and it is easily achieved. And one more thing, I have been saying that I would be using 20 EMA retracement as a very retracement or re-entry for a trending day. You can see that the CPRs average to low CPR, that indicates possibility of a trending day. So you can enter over, you can see how beautifully the retracement took support exactly at 20 EMA. So this 20 EMA line is nothing but a dynamic resistance, that what we say, like most of the time we follow horizontal resistances which are pertaining or which are dependent upon the area specific or something like that. But the dynamic resistance can be said that they are nothing but they are not a single area, they are not between so and so points in the Nifty or Nifty bank charts. They are varying with respect to the times, or you can say that there can be lagging indicators or leading indicators. So I use 20 EMA retracement as a very good dynamic support or resistance for my re-entries. But the thing here is that there should have been another resistance or support which will act as, like, you should always go for combination of two or more resistances or two or more indicators, so that you will get a better trading results. So here there was no resistance or pivot point, so I think ideally it is not the right entry. Even though if we consider, because there was a very good Mariposa candle. Mariposa candle indicates the very good strength in buyers. So had you re-entered over here after booking your 1:2 2 hour, you can keep your stop loss over here, and you can always accept 1:2 hour easily. So yeah, within next half an hour to 45 minutes, it gave one more 2 hour risk reward ratio. And you can see that there is one more pattern which we can call as a descending triangle or something like that, or you can simply call it as a what you can say a simple wedge pattern. So you can see that there was a breakout after a period of consolidation, and your stop loss can be here. So your target can be all-time high, which gave more than 1:2 hour. Yeah, this is for Nifty 50 analysis. And one more interesting point that I will be sharing at the end of this video. Do kindly watch till the end of the video, because these have been the observations since a very long period of time, and I have studied from so many trainers along with reading books as well. So the market varies with respect to days, which is purely based upon like what do you say, based upon number of participants, the retail participants or a positional traders participants or institutional participants. The market structure varies with respect to days as well, because yeah, I'll be sharing the same point at the end of the video. Kindly do try to watch till the end of the video, so you'll be getting most of strategies with respect to market sentiments absolutely for what do you say, free of cost or maybe complimentary. Yeah, one was this one entry, and another one was retracement entry, and another was a wedge breakout, which is nothing but a simple price action breakout here. So these were three beautiful entries for today. And yeah, you can see the bank Nifty. So let's start with the marking of previous swing highs and lows for the current day. So I always say that I always mark important levels with 1 day time frame. Analysis in like different time frames is also bet, like a top down approach is used in this trading analysis. That's nothing but doing analysis from higher time level to lower time levels. So that's we call it as a top down approach or top down analysis. So yeah, the previous swing low was here. This is nothing but a previous day low for the previous day. This is a very important level, and another level can be this one actually, which we call as previous swing high. No, for the current day, this one was the previous swing high, which is already been marked, and this is nothing but a gap border. Okay, so I will show that in the 5 minute chart as well. Yeah, the previous swing was, this was the gap border, and this is nothing but a previous swing high. Okay, so yeah, so this gap border can act as a very important level. So PDL and PDH have been already marked. Yeah, and yeah, so there were no opportunities with respect to my strategies that I follow. This was kind of a red candle, but it was not that used. This was a red candle though, but it looks like a bullish pin bar. So there weren't any strategies which could satisfy any of the conditions that I follow. So the bank Nifty was boring. You know why the bank Nifty was boring? Yeah, I said in the previous analysis that I'll be sharing the points of observation at the end of this video. So as for price action, the bank Nifty have a very good entry actually. So yeah, this is nothing but a this is called a rising wedge. Usually the rising wedge gives breakdowns. So this is where the price is expected to move. That's where the bears could enter over this point in time and give a huge bearish momentum. But yeah, sometimes the rising wedge can also give breakouts above the resistance line. So if we can enter here, the time was already 2:20 when the time of the breakout. There is still 1 hour is left for the closing day, so you can take a trade and you can book till the next level or next resistance if there are any pivots. Yeah, this can act also good trade, but it achieved 1:3 hour, and had there been a time left, it would have easily given 1:2 hour. So I found that only the bank Nifty, according to my strategies, was nothing but a wedge pattern breakout, and there were three entries in Nifty 50. And one more interesting thing here is that like uh, every day the same retailers will come, same traders will come, and there might be new traders with the same price action strategies. So yeah, this is nothing but a simple price action. You know why the charts happens with respect to red and this red and blue candles or the green candles that have been marked or that have been displayed over the charts. These happen due to the sentiments of execution of the traders. So usually what happens when there is a breakout, every expectation would be that the momentum will be there. So these are the strategies most of the traders all over the world follows. May it be Nifty 50 or with respect to Indian markets, or maybe like commodity international markets or Nasdaq and US markets, Europe markets or Singapore markets. So or this forex kind of tradings everywhere, every psychology will be same. So the every psychology indicates certain movements in the price. That's where the candles forms. So a strong green candle indicates a good momentum. A strong red candle or a Mazibur candle indicates a good bears in control. Yeah, so that's how the things will happen. So interestingly, the price behaves. Those so does the psychology of every trader repeats over certain period of time. So that's how the price repeats on its own. You can see that the Nifty 50 charts for today. So this current day is September 11, and very good observation here is that if you can see the chart of this one Nifty Bank on September 8. So this was a flag and a pole kind of breakout, and this was nothing but an what is a descending candle pattern. So you can see how beautifully it is replicated with respect to today analysis. There was a breakout, and here was a breakout. There was a huge momentum, and here was a huge momentum. Easily gave 1:2 ratio. So why do so they always say, a very good experienced trader always say that the chart or the pattern repeats itself no matter how long you are trading. Always they happen because the psychology of trader is same everywhere. That is same, everyone follows the same price action. So that's why they say price action is the master of all the technical analysis of the charts. Okay, so this was one kind of an example. And if you can see current day bank Nifty gave a very beautiful wedge kind of pattern breakout. So this is a quite big wedge kind of pattern. But if you can see the Nifty 50 charts, here you can see on September, I think it was around September 7. Yeah. So can you see this? This was nothing but ascending triangle pattern breakout in Nifty 50 on September 7, which is very, very similar to the chart that happened in the bank Nifty. So what I'm trying to say here is that no matter how long you are trading, how you have been trading, always try to follow 1:2 risk reward ratio, and always try to study the charts that you have been studying. So the price behaves itself. The pattern repeats all over the world, all over the charts, no matter in which indices you are trading. So that's how staying or observing the markets for a longer period of time tells you or makes you understand how good or how beautifully the price action takes place. So this is one kind of an observation. So these things will be repeated over again and again. That's how you master the charts over a longer period of time. Stay with me. I will be updating about the same on a daily analysis. And yeah, that's how you can master your trading price action analysis. Yeah, that's it for today. Thank you for watching, and do like, do comment, do subscribe to the channel for further analysis of the same. Thank you for watching.